The TTF front month looked prepared to push a little bit higher at the start of this week. We did recover from the low 30s last week, but how much higher can we actually go, and what are the resistance levels we need to keep an eye on? Hi, my name is Marcello Colax. I'm the managing director at Clever Markets, and today on the 14th of July, I'm gonna walk you through the European charts. And as always, we are starting with a disclaimer. So everything you see here, of course, is just my personal humble opinions and not an invitation to trading. So this is what our Clever Markets clients are getting this morning. This is just a rough update of the market stance overall, and you can see that for the hourly chart, daily chart and weekly chart, the TTF and the NBP are fairly bullish, whereas German power and EUAs are still rather on the neutral side. Brent is still neutral, and so is most of the other markets. So how do we read this chart? Because I am presenting this to you every week essentially, so I want to make sure that it is interpreted correctly. So I want to start it by illustrating it with a little bit of a sheet here. So you see that, let's say the hourly chart is bullish, and let's see, I don't know, let's say the daily chart is bearish and the weekly chart is bearish. So what this would look like in practice is that we have an underlying downtrend as shown by the weekly chart. And also, let's say that the daily chart is also giving us a big bearish confirmation. We make lower lows and lower highs. So where does the bullish hourly chart fit in? Well, this would be simply just these upside corrections that we are seeing that are countering the primary move. So the outlook or the market assessment that we are seeing on the TTF dashboard every morning, these are not market predictions. What they are current reflections of the market right now. So there's no predictive properties here, so don't use them as a trading signal. Oh God, please don't do that. So here's the thing. If all of them are aligned, or if they're a little bit misaligned, these can all be used for different things, right? And as I just said, if, for example, just one of them is, let's say, bullish and the other two are bearish, this is ideal, because if you are a counter move trader and you wish to capitalize on the intraday up move, then you can absolutely do that, because we are showing you what the hourly chart is doing as well. If we are more of a swing trader or momentum trader in general, you might want to wait before the hourly chart starts moving sideways again, because that would then mean, let me take orange, that's better to see, that would then mean that the market has topped out but isn't quite bearish yet, right? So if we have, when you turn from bullish to neutral, and if we then, I see the hourly chart moving bearish again, that simply means we are once again fully aligned with the higher level daily and weekly charts, and then probably the trading opportunity is kind of over. So this is how I want you to see it. So it's always that the lower chart is moving first before the higher level chart is moving. And all of this is perfectly shown here on the executive summary of the dashboard. So if we see that the EUAs are bearish, whereas the rest of the market is neutral, well, I haven't looked at the real chart yet, but it could mean that within a neutral market, we're currently experiencing a down leg. Use it like that. Okay, so this is our TTF sentiment poll, and we ask the market every single week where they think the TTF front month might be going for the week ahead. So you can see that last week it was fairly balanced, as the market was just coming out of a trough. We are just marginally recovering from bottom. Also, the market moved a little bit sideways. We had very small candle bodies, and of course it was understandable that most of the market is rather sideways. With no clear winner on the bullish, bearish or neutral side. This week, or last week, this week, we did have 46% of a bullish stance. So what does that mean? So that means that at the start of this week, 46%, or the majority of the market, thinks that the market is more likely to move up. A smaller share, 25%, thinks that the market will continue lower. So we'll keep this in mind as we are walking through the charts now one by one. And I'm making myself very small here. And you can see the TTF and the NBP front month, the TTF and the NBP front season. We do have EUAs, German Power, Henry Hub, and Brent. From 2 weeks ago, we did see that the market actually was just recovering marginally from these troughs here, and we are actually moving sideways. Only towards the second half of last week did we make some progress. Now here's the thing, we're working with some really clear resistance levels where the bulls will be challenged at the start of this week, and we'll go through these in just a moment. Now, let's have a look at the TTF front month first. So I want to start with the weekly chart just to give you a sense of scale of where we are. You can see oh, that's too much, there you go, zooming out. Like in the long term, we are kind of, are we in an uptrend? Not really, it's a giant range, right? Can you see we've got this peak here, which kind of coincides here as well. We've got this trough, and this trough. And you can see how far back we have to go. We're going to May 2023, we are going to October 23, Feb 24, and then here this last peak in February 25. So this is like the long-term trend. Of course, doesn't mean we avoid trading for literally 2 years. What we do is we make use of the smaller swings. So here you can see we had this downtrend, uptrend, and now what is this here? So if we refer back to the TTF, we see that we are still fairly bullish, and we just turned from neutrality towards bullishness on the weekly chart. Why did that happen? You can see we were neutral because we had this uptrend happening that was in force since April 2025. We turned a little bit bearish. We abandoned our bullish view with this bearish engulfing candle because this is usually a pretty good setup for the market to continue lower. But now 2 weeks, it took the market 2 weeks and we still don't have any bearish confirmation. So that's why overall bearish continuation seems less likely. So that's why a couple of weeks ago we turned from bullish to neutral, and now we are back to our bullish stance. We are looking at this, we see that the bears didn't make any progress. Yeah, maybe the bulls aren't quite there yet either, but they are making a good attempt. And you can see this big strong green candle could be in favor of the bulls. We also did get a marginal bullish signal on the stochastic, on the slow stochastic oscillator in neutral territory, where %K is crossing above %D, which is overall seen as fairly bullish. Now, what's happened? So in here for the TTF, we think that zooming in, we are now probably aiming for the 38.696 level, which is the 61.8% Fib retracement, simply measured from up here to down there. So what does that look like on the daily chart? So you can see we are working with a 38.7, so it's more or less the same 61.8% Fib retracement on the daily chart. We broke below the ascending broadening wedge. For now, we still leave it on because it is offering some pullback resistance here at the 38.2% Fib retracement. So this is where we are. What's happening next? Now, we bottom out, move sideways, push higher. How high can it go? The next area of resistance is the 36.38. This seems fairly likely to be reached eventually, which coincides with the 38.2% Fib retracement, and it also aligns with the resolved broadening wedge old support level that is now offering resistance. So for now we think probably the market could go until there. If we start seeing bearish reversal candles, and especially on the hourly chart, because I think we could go here within, well, this Monday or probably on Tuesday, then we would need to make a decision. If we see bearish reversal candles, then the downtrend might continue, or at least the bulls will take their sweet time. And if we push higher above the 38.2% Fib retracement at 36.38, then we could probably make it towards the 61.8% Fib retracement, which is smack in the middle of this big gap. So what are the tools saying? So a couple of days ago, probably around here, we did see that the stochastic is making a bullish signal. So we moved from the oversold territory into neutral territory. So that simply confirms that, yeah, the bulls are giving it a good go. We also saw that the MACD gave a bullish crossover with the MACD moving above the signal line. So that is kind of aligned with a little bit more bullishness, at least for now, or at least that the bearishness for now is weakening. However, I do keep a close eye on this here. So this is the ADX, this white line here, and you can see the ADX is near 13.7. What does that mean? Well, as long as the ADX, the average directional index, is below 20, that means that the market is not trending. So we are sideways. So as soon as this white line here, the ADX, starts moving above 20, that means we have a trend going on. And only then would we be starting to look at these green and this green and red line, where red represents the bears and green represents the bulls. How does this work? So we move above 20, right? And then we start looking at this, which one is above the other, and then that's the direction. If green is above red, that's bullish. If red is above green, that's bearish. If we are below 20 on the ADX, we ignore the whole tool. That's how it goes. Okay, so for now, it simply is showing us that the bulls are giving it a good go, but they're not quite in the clear yet. So some traders might wish to wait for a move above the 38.2% Fib retracement before taking a bullish stance on the daily chart. But anyway, in this these small candle bodies here, where we're kind of hoping that the next candle will turn out bullish or bearish, that's no good. So it's telling me that we're on the wrong time frame, because we want to be dealing with swings. So you can see I'm now in the hourly chart, and we are dealing with swings. So that means this is probably the right time frame. And we are bullish on the hourly chart. And as long as we continue to make higher highs and higher lows on this chart, the bulls will continue. And look at the ADX here, very different. Here the ADX looks very different. The ADX is at 27, the average directional index. The DI plus, so the bulls, are on top, well above the bears. So see, that's the difference. The bulls are strongly in charge. Here we can use the tool. We also see no bearish indication from the stochastic whatsoever, and the bulls are marginally recovering here as well, and we might be pushing until here at least for the MACD, which is simply showing us the bullish momentum. So yeah, what I want to see this morning is a move above 35.7, then we could make it towards a 36.384. If however we start pushing below the channel near 35.2, then the bull trend on the hourly chart would be neutralized, and maybe the bears would be in charge below 34.85. So these were the European energy markets for the week starting 14th of July 2025. We are approaching on the up leg some fairly important resistance levels. It is always some 38.2% Fib retracement of sorts, so do be careful. Keep an eye on the hourly chart, because this is where we will first see any sort of like divergence from the bullish trend. Keep an eye on all these channels and rectangles, and you'll be a little bit better prepared to trade the week. Everyone, have a good, safe week. See you around, and bye bye.